Well, welcome back to the Better and Better podcast. My name is Luke Fleck. I am the Director of Digital Engagement here at SPAR, and today we are going to be talking all about title insurance with Thomas Barkey, who is an affiliate member here at SPAR. Thomas, how long you been in real estate? Who do you work for? And why are you still in real estate?
Three valid questions. I work for a company called Ancona Title and Escrow. It's a family-owned company here in the Twin Cities and St. Cloud. We've got 9 offices. And I started in 2016. So about 8 years now, I've been involved in title. And the real estate industry is just a great industry. I mean, all in all, there's so many facets to it, so many levels to it. And I mean, let's be honest, you open your eyes and you look in any direction, there's real estate all around us at all times.
It's true.
You can't get away from it. And the industry is strong, it's growing, and it's always going to be there. So, yeah.
Awesome. Well, I'm really excited. I've been wanting to do a podcast on title for a while. I feel like it's one of those topics that sometimes gets brushed over a little bit.
Yep.
You know, we like to talk about, you know, mortgages a lot and what are available for home buyers and the different programs. And title insurance is, you know, a really key component of the home buying process. And especially for, you know, agents or realtors working with first-time home buyers, you know, it can be really daunting as a first-time home buyer. And then suddenly it's like, oh yeah, you're going to get reached out by a title company. You're like, hey, what? What's title what is title insurance? You know?
Yeah.
So, you know, our hope is that this is some great information that can be brought back. These agents can take and bring back to their clients to really help advise them. And we got a lot of fun topics we're going to be talking about today. Yeah. So I guess the first thing is really just, what does a title company do?
So title company is an insurance company. So we do issue title insurance policies. That's one part of what we do. And the other part is to facilitate real estate transactions. So buying, selling, refinances, commercial, construction, new construction and loans, like just anything in the real estate world as far as the transactional process, the title company will help navigate that.
Okay. And I know that, I mean, you know, you also have your homeowner's insurance. Mm-hmm. So is it similar to homeowner's insurance or is it something completely different?
Completely different. It's an insurance product and it does protect, but it just protects different things outside of your homeowner's insurance. So homeowner's insurance covers if a tree falls on your roof. You file an insurance claim and insurance helps you navigate and pay for the cost to bring your house back to 100% of what it was, right? So title insurance just will help cover any title defects, any title issues. And then there's a number of issues. There's liens, there's encumbrances, there's encroachments, just any number of issues that could arise during your ownership or previous to your ownership of the property.
Yeah, and I mean, especially when you got land that's been parsected out multiple times.
Yeah.
You know, there's bound to be something.
Yep. You know, and it started out with more of like an abstract, which is kind of interesting. I have a home that was, I think, platted in the 1860s. I have the original abstract, which is a written history of ownership. And now things throughout the time have moved to more of a digital. So most everything will exist digitally, county websites or at the county defining clear chain of ownership. But the abstracts, if you have one, read through them. They're kind of fun.
There's a little bit of history on your home.
Yeah. It's really neat to see who originally purchased. And I love the old paper. And I love the old handwriting. I think it's really kind of a neat. It's archaic at this point, and it's more of a souvenir for most. But yeah, so if you have the abstract, read through it. It's kind of fun.
Do you have that, like, you know, in a frame hung up on a wall?
Oh, of course. Yeah, of course.
Like over the bathroom, you know. So
yeah, bathroom reading material,
yeah, exactly.
Ownership. Yeah.
So, you know, I know that title insurance is required, but I know that there's two different types of title insurance.
Yeah. Yeah, so there's what's called a lender's policy, which just secures the lender's collateral in the property. So you take a loan from a bank, you sign a mortgage, the lender has a secure interest in your property until you pay that loan off. So the lender's policy, which is required by the lenders, the owner purchases that. And again, that just holds their lien position. In case of a foreclosure scenario like that, they're the first ones to get paid. So it holds their first lien position. Now, the owner's title policy is an optional policy. As you purchase your property, you do not have to pay for it. But there's some caveats to not owning it versus owning it. One, you pay a one-time fee. So at closing, you'll purchase that owner's title policy, and that covers as long as you own the property, that title policy is in effect. And again, it just covers any title defects, any ownership issues. Title companies work off of databases.
Okay.
Right? So we get all of our information, chain of ownership, from databases. If something doesn't exist on a database, there's really no way for us to know about it. That's where the insurance comes in. We do our due diligence on the front side to make sure that there is clean and clear title for the sale or purchase of a property. Again, if we have no knowledge of something that exists in the world, that's where the insurance comes into play, right? So, and just like any other insurance product, when you bundle products, so at the time of your purchase, you purchase the lender's policy, it is bundled with the owner's policy. There is a discount for purchasing both policies together, right? And again, covering ownership of the property. 6 to 7 years is generally kind of the timeline where people will either own and sell the property or refinance at that point. If you refinance, your original owner's policy transfers. It just carries right over.
Oh, okay. That's awesome.
You will not purchase another owner's title policy. You'll have to purchase the lender's policy at that point, again, securing the new lender and their lien position. But the owner's policy will carry over. So even at a number of 6 or 7 years, you pay one time for this owner's policy. It covers the life of your ownership. So as far as insurance products go, it's one of the least expensive, especially over that timeline of ownership.
That's kind of funny how it's one of the least expensive over that time of ownership, and yet it's kind of important, it sounds like.
Absolutely.
Because I had a friend of mine who they had bought in a home, and there ended up being, after they had closed on the home, like year later or whatever, there ended up being a title issue. And the two owners back was claiming that who they bought it from didn't have the right to basically be able to sell the property to them. So they were trying to like come after them and be like, no, you can't do this. You can't own this property. And because they had bought a owner's policy, they were covered and didn't have to deal with all those attorney fees and legal fees to try and, resolve this issue to prove, no, you did, sell the property. We have clear, and none of that came up during the title process when they closed on the home.
Yep.
So, it's just that there's always that risk because you never know.
Absolutely.
Especially with homes that are, been around for years and years and years.
Yeah. Now, there's a number of issues that can come up, and I'll speak of two that I know of specifically. One was a family thing with my parents. Now, my parents had bought a cabin back in like 1970 from my grandparents. The original owner of the property was my grandfather's father, so my great-grandfather. And it was a small little resort on a lake. And the property was parceled off, so my grandparents owned one parcel, we owned the middle parcel, and then another family member owned the parcel adjacent to that, right? No, we always understood what the property lines were. It was the lilac bushes that ran between our cabin and my grandparents' cabin. Well, my parents were looking to retire, and they were looking to get into more of a lake home versus just a kind of a 3-season cabin. So they sold the property, they sold the cabin, and after the cabin was sold, the new owners had a survey done, and the survey defined that the property lines were about 4 feet closer to the property that they bought than we had as a family, generationally, always understood the property lines to be. Now, there was some issues. My parents ended up having to repurchase the cabin from the people they had sold the cabin to. Oh. They reneged. They said, no, we want out. This isn't what we paid for. And my parents paid out of pocket, not just for the attorney's fees, the filing fees, the repurchase fees, all the fees to buy and then resell, plus having to pay for the survey to clearly define property lines so that they could sell the property again. So it was about a 2-year process that was really an issue and caused a lot of drama in the family and a lot of problems. So, that's just one scenario. Another scenario is again, it's optional. But again, working off of databases, if something doesn't exist in that database, we can't see it. We don't know it exists. And a perfect example is there's a woman that purchased a property from a contractor, new construction. The contractor had originally purchased the land from a farmer. So it was just one parcel farm field that he had parceled off, right? So pretty clear chain of ownership. The farmer owned it for a lot of years as a family farm. So really, just the one owner to the contractor to the buyer. She had opted out for the owner's title policy, feeling really confident that the chain of ownership was clear and clean, and I don't need this. Now, other things can come into play, and what came into play here was a mechanics lien. So one of the subcontractors that had worked for the contractor did not get paid for the work he had done on the property.
Oh, gosh.
About 30 days after closing, he had filed a mechanics lien for $12,000 against the property, again, to ensure his payment. Now, a mechanics lien is anytime you contract service or materials for work to be done on the property, that contractor can file a mechanics lien to guarantee their payment, right? And they'll file it against the property. So post-closing seems like clear chain of ownership, which it was. But with that mechanics lien now, she had to navigate that on her own, which meant hiring a real estate attorney to help navigate the issues. And essentially, she paid the attorney, and then she also had to pay off that lien to release and clear her ownership of the property. So that's just one of so many scenarios that can come into play that title companies, with their due diligence, aren't always going to see because they don't exist.
Yeah.
Until they exist.
Well, and it's like it's a brand new property. Like if I was buying a brand new property, I'd probably be like in the back of my head, do I really need to, buy, an owner's policy? But clearly, anything can happen.
Yep. And mistakes are made.
Yeah.
Things do happen in this life, and that essentially is what insurance is for worst case scenario.
Yeah. Yeah, my dad always used to tell me, he would say, you buy insurance for the things you can't afford to replace.
Exactly.
And like home insurance, yes, home insurance is required, but like even though, you only have to, is it just the lender one that's required to be purchased?
As of now.
Okay.
President Biden's last State of the Union, he had made just a quick little one-sentence statement in regard to lenders' policy on certain government-backed refinances.
Gotcha.
He's trying to, as an administration, they want to try and lower the costs for homeowners. Mm-hmm. And that was one sentence in the full full State of the Union. That was acknowledged that is a pilot program. As I looked into it more, there's a pilot program that they're going to try and initiate. So removing the lender's title policy, again, from federally backed refinances. We'll see what happens in the future. We'll see what happens in the future. Again, one statement made, and we'll see what the administration does with that. But as of now, lender's title policy is required from the lender, because again, it secures their interest in their.
Yeah.
You're using the property as collateral, so it secures the lender's collateral in that property.
Well, and I don't think there's any lender out there that wouldn't want to move forward without having that anyways. So it wasn't necessarily required in the past. It was just generally accepted then.
No, I think as far as I know, it's always been required on the lender's side, and it's been optional for the owner's title policy.
Gotcha.
Again, securing the owner's legal ownership rights in that property.
Yeah. Do you ever see a time then where owner's policies might become something that's required? Or is it just you feel like it's always going to remain something that you
I have
kind of pick
no
and choose?
knowledge of that conversation taking place. As far as I know, it's always going to be an optional thing. Of course, things move and change in this world, so anything can happen. But as of now, it is optional.
Okay. And I know you mentioned there's like that discount when you bundle it. So how much is how much of a discount are we talking about? Are we talking about like, if you bundle it, you save, 20%.
Yeah.
But let's say, if someone wanted to buy title insurance after and they're like,
Sure.
kind of feel like I should probably get this.
Yep.
One, can they do that? And then two, is there a difference? What is kind of that difference in cost? I'm sure it varies based on the property and stuff, but
yeah, it's all a numbers game. But if you think about it like a home and auto bundle, you go through one company and they bundle both policies into one policy, you're gonna save money on those policies.
Gotcha.
Right? And it's the same if the lender's policy and the owner's policy are purchased together at the same time. There is a discount for that total cost. Right? Now, you can always opt out of the owner's policy. The lender's premium will be higher for that one specific.
Okay.
So the numbers on the ALTA or the settlement statement do not always reflect the actual savings because of the bundled rate. Again, the lender's policy will increase because there's now more risk on the lender's side because you are not insuring your ownership portion.
Makes sense.
Right? Now, if you opt out, which again, you have a right to, you do have 30 days with us. I can't speak for other title companies or other underwriters, but through us, you have 30 days to purchase that at the discounted bundled rate.
Okay.
After 30 days, you would pay a full premium. So essentially, you'd be paying a full premium for the lender's policy, and you'd be paying a full premium. You would lose the bundled rate after 30 days. So there's time to resolve that. If you do have second thoughts, post-closing, you do have 30 days. They would just need to contact us directly and, again, purchase that at the bundled rate. After that 30 days, that premium would increase to a full premium.
Gotcha.
Which would be just base numbers the discount would be about 2/3.
Okay.
To the full 1.0 on a completely separate policy. So it can be hundreds of dollars.
Save you some money.
And again, when you think about it, the life of the ownership.
Yeah.
So even if you refi that initial owner's policy still carries through. There are certain scenarios where it can transfer also.
Oh.
Yeah.
Okay.
Yeah, certain scenarios.
Yeah.
And again, talk to your underwriter, talk to your title insurance representative, and they can clarify their policy. But what I understand is as long as really no money is being transferred and there isn't a sale of the property.
Yeah.
Now, examples of that would be an owner drafts up a trust, and they want to move ownership of the property that they own as an individual into the trust.
Yep.
That owner's policy would transfer over. Again, an investor purchases a rental property as an individual, starts an LLC to protect themselves and their business venture, and they transfer ownership into the LLC. Again, that title insurance, that owner's title policy will transfer over in those scenarios. Divorces, ownership transfers from two people to just one person. Again, that owner's policy will now cover that one individual versus the two owners. So there are certain scenarios. Also, transfer on death deeds. Parents define a transfer on death, defining ownership. Once they pass, ownership moves to their children or whoever they've defined. Again, that owner's title policy will transfer in those scenarios.
Well, that's a positive.
Yeah, no, it's a great thing. It's a great thing. Absolutely.
Because then it's not like, you're shelling out a chunk of change, And I know for like a lot of people who invest in properties and do it as an investment, not having to then, when they're transferring it over to, an LLC, not having to worry about that.
Yeah.
Because then that's just another cost on top of,
Yep.
trying to do investments. So with the owner's policy then, are there different like levels to it or different packages that are available? And then what are kind of those package, if there are, what do those packages cover?
Yeah, there are. We work pretty specifically with Stewart Title as our underwriter.
Okay.
So they've got two policies. One is called simply owner's policy. The other is called the homeowner's policy or an extended policy, right? So traditionally your owner's policy, kind of your base policy, would cover any title issues, title defects, encroachments, encumbrances, things of that nature up until the date of the sale. So they cover any past issues.
Okay.
Things that have happened on title in the past, right? Up until your date of ownership. We, about maybe 2 years ago, we moved into what's called the enhanced or the homeowner's policy. Now that covers certain scenarios during your ownership, not just past. It does cover those also, but issues currently on title during your ownership. So let's say somebody fraudulently files a deed claiming ownership of the property. You have no knowledge of this. You don't know the person, but they've fraudulently filed a deed at the county defining their ownership. And now they start taking loans out against your property. That enhanced or homeowner's policy will now cover issues in that way. Covers certain scenarios if your neighbor builds a garage on your property, 6 inches onto your property. Again, during your time of ownership, it will help you not only cover the cost, but then you've got the representation to help navigate the issue too.
Well, yeah, because where are you going to start with that? You're going to try and just call a lawyer, and then that's a lot of fees.
I mean,
that's a lot of cost just to get a lawyer involved.
Ultimately, it really is. You've got your retainer and then court fees and this and that, and it can all start adding up really quick when you could have really just resolved it with the one-time fee you pay covering your ownership of the property.
Yeah.
So, it's optional, but I always recommend it.
Yeah.
It's rolled right into your closing costs. And depending on what you want to come up with down payment, you can pay it out of your own pocket at the time, make that part of what you're contributing to your closing costs. It can be rolled into the loan. There's a lot of options available for the buyers.
Well, that's good to know.
Yeah.
Yeah. That it can get rolled over into the loan.
It's all how they structure the loan and their down payment and what they're covering. So, yeah, I highly recommend it. I think it's one of those insurance products that is there if you need it, and hopefully you never need it like any of your insurance products. Ultimately, worst case scenario, you want it, but nobody really wants it. But it's good.
It's true.
It's good to have.
It is good to have. Well, and it sounds like just buying an owner's policy, like, sure, there's some great, potential risk with that. But, if it's a clean title, yeah, you can't see everything. But anything that comes up after that, like, I feel like that's the biggest benefit, right?
Yeah.
Because I feel like for the majority of the time, there's probably going to be more risk going into the future, would you say, than there would be in the past? Or is there kind of like a 50-50 split, or it doesn't really matter?
I think it's a 50-50. You flip a coin and it can fall on either side. You know, again, we work off of 3 databases to clear title. Find ownership, find liens, find any issues on title. If the information isn't a part of one of those databases, there's no way we can know about it.
Yeah.
And so again, it covers, you know, we do our due diligence on the front side, and that's the best we can do. But if it's an unknown that shows up after closing, there's not much we can do about that at that point. That's when the insurance policy, that's when a claim is filed, and then we can start navigating that issue with the homeowner and resolve. So,
yeah, I mean, it definitely sounds like it's something that everyone should get. And I understand that, especially when you're working with first-time home buyers, it's a lot. Like,
it is.
There's, you're getting all these things thrown at you, and then towards the end of the process, they're like, oh yeah, the title company's going to reach out to you, and you're like, wait, title? What's that? Like,
yeah.
I feel like for most first-time home buyers, it seems like an afterthought or not an understanding.
Yeah.
So how would you kind of advise realtors to talk about title with their clients?
I think it's always good. I think, real estate is a referral business. And I think as a real estate agent, I think it's super important for a couple things. One, to have more than one title company to be able to refer your clients to. Essentially, we're going to work with who we align with. And given the opportunity to talk to that title company, see what their policy covers, see what locations they have available for closing, what's going to be convenient, what's going to work best for them, right? So I think it's great to have a couple different referrals to put out there and give your client the opportunity to make their best decision based on the information that they've come up with. I mean, the biggest question I get from homeowners, like especially first-time home buyers, is, what is title? What do you guys do? Right?
Yeah.
Because it is an unknown. We understand what a loan officer, what a bank does, We understand what the real estate agent does. What does title do? You have to think of title as the neutral third party.
Okay.
Right? We're a neutral third party. We are not working... we're working for the client, but it's in a very neutral capacity to help facilitate the closing, making sure that title's clean. So when they purchase the property, it is a free and clear title. They have sole ownership of the property. There may be a lien placed for the mortgage, and that's an understood in the process, but there is no ownership outside of the owner at that point.
Gotcha.
Right?
Yep.
And then we're also the kind of the financial neutral third party. So when you're purchasing, the money that you're using is running through the title company to the lender, right? So we're, again, a neutral party in that to help facilitate the financial. So if there is a payoff of a previous mortgage from the seller, the title company will make that payoff. They'll make a final water utility payment. They'll make all the payments that clear up all the liens that currently exist on the property, so that, again, that ownership is transferred clean and clear to the new buyer.
That makes total sense. I like how you likened it to being a neutral third party that's just facilitating and making sure that everything's getting done and organized. Because if you didn't have that, I'm sure there'd be a lot more title issues.
Absolutely.
And that's a big responsibility too, as a title company, to make sure that stuff happens.
Absolutely. And essentially, when a lender's involved, we're following their instructions. This is what we need you to do as a title company to facilitate this transaction. Right? So we're following an instruction manual, right? And then we're also working with them to resolve any title issues. So we'll issue what's called a title commitment, right?
Okay. Yep.
And that will define ownership, liens, encumbrances, anything that exists on title right now. We'll send that off to the lender. Their underwriting will review, and then we'll get the instructions from them on what they need us to do to facilitate this transaction. Right? It sounds complicated, but it's really actually a pretty simple process.
Yeah.
It's just due diligence and then completing the circle. Right?
Makes a lot of sense. And I know you kind of touched on this a little bit, and I want to circle back to it because I think it's something that's super important. You talked about fraud,
Yes.
whether that's title fraud, and I know wire fraud is also a big thing,
Yes.
especially with everything being digital. I mean, I saw a post pop up about a gentleman who had owned this piece of property for years. Someone forged some document saying that they owned it, sold it to a builder. The builder built a home, and I don't know if they actually sold the home or whatnot, but this guy came back after years only to find out that there was this $1 million home sitting on his land, and he's like, this is supposed to be empty. Now I'm hoping he had title insurance and an owner's insurance policy to deal with all that, because now if that home was sold, now you got the residents there who think they own it, and then you got lender issues there, and then you have the builder has their issues. And let's be honest,
Absolutely.
I mean, you're hoping that the guy who forged the documents, the guy or gal that forged the documents, is going to have some repercussions for that.
Absolutely.
But when it comes to kind of like wire fraud and title fraud, how can what are the processes in place to kind of protect against that, and how can agents counsel their clients to protect themselves? Because I mean, as we know, when you're buying a home, especially for the first time, there's a lot of things going around. You're getting a lot of emails, and then it's suddenly like, send money through this, and you're like, okay,
Yep. Yeah. Well, I'm going to start kind of with the enhanced owner's policy.
Yep.
Part of why we issued that is there was a company called Title Lock that started doing a lot of advertising, a lot of commercials. And that was one of the biggest questions that we would get. Now, Title Lock monitors anything on title at the county, right? So if you own a property in Washington County, Minnesota, it'll keep an eye on that and see if any liens are placed against your property, if any deeds, anything goes on title, right? And then they inform you of this, but they don't cover any of the costs to navigate the issue. It's more just like a red flag. Hey, this exists, right?
Yeah.
So with the enhanced title policy, it actually covers things in the future. So if somebody fraudulently files a deed claiming ownership of your property,
Yep.
this helps cover the costs and will help you navigate that issue, right? So that's one way that we're working to prevent fraud and to help mitigate any losses in that regard, right? Now, there is a lot of fraud in the industry. There is. Wire fraud, billions of dollars are lost on a yearly basis. We've actually deferred to a third-party wire service for any, whether proceeds of a sale or wiring into, right? So we started working with a third-party company. Now, once that information is established, it becomes an insured transaction, right? So again, covering any losses and helping mitigate any losses for our buyers, sellers, or for us as a title company. Mm-hmm. But I think the best thing people can do and the best thing agents can do is talk about self-advocacy. No one's really going to be looking out for us as individuals. In life, it's self-advocacy. You have to ask the questions. Mm-hmm. And that question can sometimes be, is this letter that I got in the mail real? Is this valid? Do I need to pay somebody $100 for a certified copy of my deed? Right? Those are the types of questions you have to ask yourself. And I think the best thing that real estate agents, loan officers can do is to frame the picture for their clients, defining one that a lot of information is going to be coming at them once they buy or sell, once they even get a hard credit pull for a loan application. people will be reaching out to them.
Yep.
Right? Offering them lower interest rates, whatever it might be, right? So framing the picture of what this looks like, you will get a lot of information coming at you. There will be mailings. There will be these things. So framing the picture and giving them the chance to be that advocate for themselves, to question what is coming their way, but then also helping them navigate what those things are. I've seen a lot of real estate agents at the transactions that have told their clients, hey, if you get something, take a picture of it. You know, if you get a mailing, just take a picture of it and send it to me, and I can help you figure out what this is, right? And I mean, it seems like every week there seems to be a new scam.
Oh, yeah.
I mean, people are always ahead of it. You know, mortgages are bought and sold regularly in the marketplace, right? You'll get what's called a notice of servicing transfer from your lender. Hey, by the way, we as X bank will stop accepting payments on this date.
Yep.
On that same date, your payments are now going to go to X lender, right? Happens all the time. Now, one of the newer scams is that your mortgage has not been sold, but somebody is telling you that it has. And I met this very sweet older couple, good people, paying their bills, and they got scammed. They were in default. They were out 2 payments. They had sent to wherever this letter told them to send it when their mortgage had not been sold or the servicing rights had not been transferred. So they're 2 payments out, they're out the money, they're in default, the lender's on them, and they ended up having to refinance to get out from underneath the problem that was caused. And you know, again, it just goes back to self-advocacy. If you get something stating, hey, you know, your mortgage payments are now going to go here, call your lender at a number you know is your lender, and confirm all the information coming to you to be correct and true. And you know, the fraudulent activity, I mean, it goes deep. It goes into hacking into email accounts of real estate agents, of loan officers, and they'll sit back and they'll just monitor the communications for 30, 60 days while this transaction is sort of forming and building. And then just at that right keyhole moment, they'll get in and they'll pretend they're your loan officer. They're your real estate agent. Like, hey, we need you to wire this to this. This is where you're going to wire this, right? Anytime you get any email, anything, call the professionals you've been working with and confirm the information. Confirm the information is coming from them directly, not just somebody that's kind of snuck in the back door and is now moving parts when they don't need to be moved. You know? Yeah, that's so informing your clients as realtors, hey, you need to be an advocate. If something seems fishy or you don't understand it, you know, call me, call your lender. Absolutely.
You know, get in contact with us, you know, and that's why they're there, right? To be able to help you navigate those.
And we are a referral business, and the better you can help kind of protect your clients and kind of inform them. Because as just a general person, like, hey, I'm buying my first home, I'm working, we just had a baby. There's a lot going on.
Oh yeah.
Right? Even for people that have owned 3 or 4 different homes, it's still a big process. So it's just informing them and giving them that safety net where you've got my back.
Yep.
I'm a good advocate for myself because you help guide me through this process. That will in turn build that referral business. They took such good care of me. I got this letter. I didn't pay the $100 for my certified copy of my deed. They saved me $100 because they let me know about this. That's that referral business that every loan officer, every real estate agent, every title person is looking for. Super important.
Yeah, and I mean, even they'll try and get you with, you know, mortgage insurance. Like they'll be like, oh, you need to have, you know, mortgage insurance for your home to cover you. And they'll be like, you can send that to here. And they'll like put your previous, you know, your lender's name on it. You know, when I bought my house, I immediately started getting those after. And I was like, look, my lender immediately sold this off. Like it's not
Yeah.
even with these guys anymore. And it was constant. And I still get them, right?
Yeah.
I've been in the home for multiple
Yeah,
years.
absolutely.
And I'm still getting them. And I was like, "Could you just stop? Like,
Yeah.
this is just annoying, And,
Yeah.
Thankfully it's one of those things where, I was walked through the process, so I know who owned what, and having mortgage insurance. That's not for me. That's for my lender, right, or whoever is holding my loan, right, to protect them. So, it's like thankfully I was understood that process based on how my realtor helped me and those sorts of things to be able to just be like throw it away. You know, because otherwise, I mean, who knows?
And I think it's super important too if a real estate agent or loan officers have any questions about title, about title insurance, about what our policies cover. Talk to your title person.
Yeah.
Ask the questions. Inform yourself. Give yourself that edge up. Because again, it's all a referral business. So the more information that you can bring confidently to your clients, the more they're going to respect and trust you for those future referrals.
For sure. So with title insurance, then, what are kind of some of the typical problems that you see arise with title? I'm sure there's no like crystal ball of like, these are the top 5, but what are kind of, because everything's unique, but what do you typically see arise?
There really isn't. There isn't one or two specific things.
Yeah.
What we do see a lot in the sale of properties is, somebody's going to purchase a property. They've had a mortgage that they paid off. Now, 2008, 2009 kind of wrecked the industry in a lot of ways. A lot of lenders had gone under. Mm-hmm. So when you pay off a mortgage, you'll generally get what's called a satisfaction of mortgage. Congratulations, you've paid off your mortgage free and clear. Now, what happened is with lenders going out of business, a lot of them would either send the satisfaction of mortgage directly to the client. Now, without the client's full knowledge of the process, that should be filed with the county, kind of, again, closing that circle, defining there was a mortgage was paid off. This is the satisfaction, defining that. So a lot of consumers would get this letter and just like throw it in a file cabinet or whatever, not file it with the county.
Oh, gosh.
Right? Or the lender just went under.
Yeah.
And there was no satisfaction sent. It was total chaos during that time. So what we run across is there's a lot of satisfactions of mortgage that we look for. Right? So we have to track this down. Now, the bank was sold. It was now renamed. It was sold again. That information isn't always readily available, just depending on how that chain went, whether they went out of business, new ownership, however it worked out. So a lot of times what we can do is it's clearly defined that mortgage was paid off. It was satisfied. We can't track down a satisfaction of mortgage, so we can just insure over that.
Gotcha.
Knowing that our due diligence showing that it was paid off, that we can insure over that satisfaction or lack of satisfaction. So that's one of the biggest things that we kind of come across is just trying to track down satisfactions of mortgage. Right?
That makes sense. Yeah. I mean, 2008 was wild.
Yeah, but
part of our crazy time to live through.
Part of our due diligence is asking the right questions. So we ask, have you had any? Are there any mechanics liens against the property? Have you contracted work? Do you know of any mechanics liens? Things of that nature. Do certain statements they make under oath stating that they do not know of any state or federal tax liens, right?
Yep.
So that's all part of just tracking down and seeing if something is on title, what it really is. Mm-hmm. Can we essentially satisfy it, or do we have to do that as part of the transaction now, right? So, yeah,
So then how often, because you also mentioned about, doing a property line survey. How often do those happen, and when do you really need to do one of those?
We don't get involved in the survey process.
Okay.
That's outside of what we do, right? Basically, we work off of what is an understood.
Gotcha.
Again, what's in the databases
Yep.
for, and when you go to the county, it's not a true 100% correct, like plat. Like this property was platted as this.
Yep.
The homeowner will generally, if they're really interested and really want to just define, if they have a feeling that maybe their neighbor's garage sits on their property, they can pay to have a survey done.
Yep.
Get the spikes put in. I know anytime you need to get or you want to get a fence, fencing is huge. You have to have a legitimate survey. They have to be able to find the pins before a fencing company will put a fence in, at least a reputable fencing company.
Yeah.
Right? So that's pretty much on the owner to have that survey done on their own. I have not seen personally, and it doesn't mean it doesn't exist, but I've never seen where a lender will require a survey.
Okay.
Personally, maybe it happens, but not in my experience.
Okay. Yeah, and I know that that can happen. One of those can kind of happen as well when the city's doing work on like public streets, and if you're next, like say they're replacing the sidewalk, they'll come out and do that to make sure that, it's not technically on your property. They're protected, you're protected, those sorts of things. So,
Yep.
And I actually had a relative who they redid their driveway and the city was working on their side streets. So they kind of had a double whammy there if it was perfect for them because, they needed one for when they were redoing the driveway anyway. Yep. So it was perfect.
Sure.
So is there anything that you want to tell realtors about title, whether that's typical questions that you get asked from agents? I know you said that realtors don't typically have as many questions, or is there any final kind of like parting words of wisdom when it comes to title?
I would say just get to know your title person, be comfortable and confident being able to call them with questions. There are some really intricate properties. Mm-hmm. Great example would be a property that lies within another property. Mm. And the easement to get to the property that lies within another property, that's always one of those things when you're looking to purchase that property that lies within the property. What does that easement look like? Is it a verbal? Is it an understand with the owners, an understanding? Mm-hmm. Is it defined clearly? Does it exist at the county level? Can it be found? Right? Because that's one of those things that you really want to navigate before.
Yep.
And that's a really intricate scenario that doesn't really happen all that often, but it does exist. So it's about finding that kind of information out for your clients. We as a title company at Ancona, we're glad to run a quick property report just to see what exists on title. Mm-hmm. And sometimes there's utility easements. There's utility lines that run through the backyard, and the utility provider has a right to go into your backyard at any point and work on that so that the whole neighborhood still has electricity, right? Is that something your buyer's going to want, right? That might be a check box in the no. We don't want that on our property. We're looking for something without that, right? So just really get to know your title person and follow that process. Ask the questions, ask the tough questions, and we'd be glad to just help navigate any of those situations with you and your buyers or sellers. And we're glad to talk to the consumer directly, answer any of their questions about what our policy covers, why it's important. Right, and just give them, again, the most information, the best information, so that they can be really good advocates for themselves in that process.
Makes sense. So if people do have additional questions after listening to this, how can they reach out to you?
My email, T as in Thomas, B as in boy, AHRKE at AnconaTitle.com. It's ANCONA title.com. You can always just email me. And our website is onconatitle.com. We have our cost calculator, our locations, all sorts of great information about us as a company, how to order title. But yeah, reach out. I'd be glad to speak with you or your clients and help navigate any issues and give them the confidence going into their purchase that they're looking for. Yeah, absolutely.
Well, thank you so much for coming on and talking title. I know we didn't even dive into escrow, and that's a whole other thing that we could probably do an additional podcast on, but really appreciate it. And we can't wait to have people listen to this.
Well, Luke, thanks for having me on. Great conversation today. I really appreciate it.